Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Top story is probably going to be this headline from Biogen catching a bid on some surprising trial news for their Alzheimer's drug. We're going to talk about that, but I think we might wait until 8:10 when we're going to be joined by Adam Feuerstein from Stat News. He'll join us to break down the story for us, and we'll do that with Adam at 8:10. Aside from the Biogen news, we, of course, have the jobs number today. We have tariffs going into effect. I'm not sure how much that really matters for the market since we've been talking about it for a few months now, but that's the story nonetheless. We'll also be joined at 9 o'clock by Dan Russo, the chief market strategist at Chaikin Analytics. So that's going to be the show for today. Please join us in our chats, premarket.benzinga.com, youtube.com/BenzingaTV. Joel, what is happening this morning in the S&P futures?
Oh my God, there's so much going on. You guys are tired me out, and the show hasn't, just is getting started. Big old range in the S&P futures, got up to the top of the trading range, 2047.50. That's your pre-market high. That's just with your 6 and 8 day high. I mean, there's just all kinds of resistance up there. You have crude trading in the red by 45 cents at 72.49. Weak yesterday, and now it's testing a key support level at 72.50. Gold in the red by 3.30 at 12.55.40. Silver just hanging out around $16, down 6 cents at 16.04. In Bitcoin hanging out in the 6,000 handle. This is Bitcoin futures up $50 at $6,540. Dennis, a busy night and a busy morning for you.
Yeah.
Do we want to go right to the Biogen, or we want to cover other news and start with Adam?
We're gonna get Adam Feuerstein here on in 7 minutes, but let's just talk quickly. Biogen is your biggest mover here this morning. Last night at 7:30, they announced some positive results on their phase 2 trial there for an Alzheimer's drug, and everybody has been trying to obviously get one of these drugs to market. They've got another drug cooking too. This was actually a failed trial that they just extended, and on the extension, they saw some positive results on people who were taking a larger amount, I guess, of this drug. So higher doses showed some positive results. So last night, the stock just obviously, and actually sat there for a little bit, and I actually was able to pick some up just around the $300 area, and it started going 305, 310. I was saying to my buddy, I was like, wow, you think this is, it's only phase 2. It's not phase 3. It's not like I got approved. So I was like, it's probably worth 10 to 15 points. That's why I didn't mind paying up to 300, but there was some at 305. And I was like, I'm not going to pay up 7 points. I guess I should have bought more at 305 because this goes 310, 315, 320 by 8 o'clock last night. This morning, it opens 340 bid. So now we're looking at a 336. So they're pricing it in like this drug is getting through. I'm a little skeptical that it is. I've sold my day trade that I picked up last night, but I still have it in my long-term investment portfolio. So pretty happy with the Biogen move here. Adam Feuerstein's going to be able to talk a lot more about this in about 5 minutes when we get him on about the details, but they didn't really give any details was the biggest issue. They kind of just said, that the details were going to follow. So the street is very excited. Citigroup upgrades it to buy. There was a couple other analysts giving commentary here as well. I mean, they're just excited, Spencer, like you were saying, because everybody struggled to get a drug through, and here's one that looks like it's getting through phase 2.
I'm trying to remember who was the company that just threw in the towel like a month ago. Was it Pfizer? I want to say Pfizer threw in the towel.
There's been a lot of them thrown in the towel. I mean, nobody's got one of these. This is a horrible disease. They have tried, obviously, a lot of companies have tried and had drugs failing from this before. If somebody can get one through, it's going to be worth a lot of money. Now, Biogen, their main drug for Alzheimer's is that other one, which I can't pronounce any of these names. So this wasn't even their main drug anymore because this was already a lot of people had this already written off. And now all of a sudden this is back on the radar. So people are pretty excited about Biogen this morning. I think it's a little bit overdone in my opinion, just on this news. But the one thing to consider is these biotechs are cheap. That's why a lot of them are in my investment portfolio, because I'm still an old value guy. There's still value in Biogen, although now with the trading up 37 points on this news, I feel like it's a little bit overdone, but things get crazy in this market sometimes. And you wonder if this can't kickstart all the biotechs.
There you go. Yep. Yeah, Dennis, I just want to ask you a little something about trade execution here, because it closed at 98.81, 99.73 high. I know the SPOOs were down, but you just went nice. You only went 27 cents above the above.
Well, I bid it up. And there was literally when that news came out, there was no market. The thing was like 280 to like 320 and like 40 points wide. And I was like, I said to myself, I'm like, this is worth, I thought 5 to 10 points at least. So I bid it up and I got hit on some stock, and I was trying to bid it up to get more and I couldn't get any more. The best offer, then some offers came down and was 305. And like I said, I didn't feel like paying up 7 points because I thought, in my own head that I thought it was worth maybe 10 points at best. So I was obviously way underestimated. I did not anticipate what Spencer was saying. It was just the hype that was going to really get it going. But, we're going to talk to Adam and we'll see. Maybe there is something behind this, but I had no idea it was going to be up to 37 points here this morning. That's, crazy. Obviously, been trying to buy. There was offers at 310. There was offers at 311. I remember. So I would have been buying everything if I knew it was going to go up 40 points on it. But it was hard to get. I mean, sometimes these things there's just nothing in there. So I got lucky. I got hit on a little bit of stock. But it's tough to get these things at 7:30 at night because there's just no market in them. So I didn't get much, but I got a little piece.
And you took it over too. So that's
I sold part of it on the way out, which I shouldn't have. I sold a little bit at 310, a little bit at 315, which I wouldn't have sold any. But I had in my head already 10 to 15 points. I was like, well, I'm getting it 15 minutes later before the after hours even closed. So, and then it went 320 bid to close like after hours last night. I was like, I should have held it all. And then I wake up and I see a 340 bid. I was like, yep, I shouldn't have scalped out of any.
All right. Pre-market high is 350. We've backed off 12 points. So you could use that as a target. That's a nice round number, like 350. If you're holding out for some more meat on the bone there, 352.38. That was your high back in February of 2018. Those are some possible targets. And this is a weird number here, but I'm going to give you guys the mid-range of the pre-market session, and that comes in at 334. So that's just a Joel number there. It doesn't mean a whole hell of a lot, but if it takes out 334, I don't see a lot, anything beneath that level. Should we cover one more stock here? Before we go to Adam, or you just want to go right to him?
We'll just say, let's just cover the IBB because this is a big chunk of the IBB. It makes up almost 8%, I believe, of the IBB. So just on Biogen here this morning, the IBB is going to be up 1%. So that's saying, that none of the other biotechs up at all. But I think it's going to kind of, rising tide raises all ships. Well, a rising Biogen might raise all ships here too. So I think biotech could help this market here this morning. So if you do look at the IBB, it is trading up about 1.3%, a little bit higher than what the Biogen, but there's probably banking that's going to be some other biotechs that are going up on this as well.
Okay. All right.
I'm going to call.
Let's give us some technicals.
I'm going to call Adam right now. I'm going to bring him on the fly. So I hope he answers the first try. That would be good. But this is, again, for those of you who are new to the show, this is Adam Feuerstein. Hey, Adam, this is Spencer from Benzinga. How are you?
Hey, Spencer.
We are live. We are live on Pre-Market Prep. You're here with Joel and Dennis, and I guess we wanted to just jump right in and let's get your thoughts on this this BIIB news from this morning. The headline was great, but is the news really as great as the headline implied?
So I don't have a computer in front of me. So what's Biogen stock doing this morning?
Oh, it's up.
How much is it up?
It's trading up 37 points right now on this. So we are up right now. Biogen is 336, bid up 12.6%. Big move.
12%.
Yeah. It's up 12% on this.
So not surprising given the fact that, Alzheimer's is obviously a devastating disease and certainly a hot, buzzworthy topic for investors, traders. So when they see news like this, stocks move. So I'm not surprised by that. I would say that like from a fundamental basis, and I'm not talking about anyone sort of just trading the stock, but like, what does this mean fundamentally? You probably want to be a little bit cautious here. My stat colleague Damien Gardet wrote a story about the data last night, and I would call it a sliver of positive news from this Alzheimer's drug, but there are a lot of unresolved questions that really need to be addressed before we can kind of say what's going on here.
Well, they didn't give all the details either. They said details were to come at a later date. So, I mean, it's kind of hard to really analyze when they don't give you all the details, right?
Yeah, no, that's true, right? And that's not unusual. I mean, companies like to present clinical trial data at conferences. So you'll probably see much more detail about this study and about what's going on here. So I would say probably sometime this fall. There's a couple of different Alzheimer's conferences that are coming up, and so there'll be a forum for the companies to go and present the data in detail, and that's where we'll see it. But what you've got here is you've basically what they've told us is you've got one group of patients treated at the highest dose of this drug who have shown improvement in cognition. Now, this study, the caveats here is that this study actually failed back in December, but then they kind of just continued the study, and they did a different statistical analysis looking at the patients over 18 months instead of over a year, and that's where they saw this improvement in cognition, and that's what they're reporting.
Now, Biogen has another Alzheimer's drug that they're working on too, correct? How's that drug going?
Right. Yeah. So that's a good question, and just there is some confusion about that. So this drug is one that they partnered with a Japanese pharmaceutical company called Eisai, and it's essentially, you can kind of think of it as like Biogen's backup Alzheimer's drug. The primary Alzheimer's drug that Biogen is studying is called aducanumab. That's in a phase 3 study right now, but those data from that study won't read out until probably early 2020, possibly late 2019, but more likely kind of early 2020. Now, a lot of people are sort of looking at these drugs are kind of related in that they target the same kind of beta amyloid protein that builds up in the brain. So people are sort of looking at the results last night, and they're sort of reading into what the potential for Biogen's main Alzheimer's drug, aducanumab, because again, they do the same thing.
What are your thoughts here on just biotech overall? Because, you come in here and this is a sector that has probably lagged. I mean, over the course of the last couple of years, really, when I look at the chart, even of the IBB, we've kind of gone nowhere here. Do you think news like this could kickstart the entire sector, even, stocks that aren't working on Alzheimer's?
Yeah, I mean, over the last year or so, biotech it's been kind of interesting. I think it's kind of been a story of two different spheres within biotech. You've had outperformance from the small and mid cap companies, mainly because you're seeing a lot of interesting drugs being developed there, and sort of this idea that they're going to be taken out. So there's the M&A thesis. But then you've got the large cap companies, including Biogen, which have really underperformed the market. And so that's where you're kind of seeing, if you're looking at the IBB, which is market cap weighted. Therefore, you're seeing underperformance there. But if you look at an index like the XBI, which is equal cap weighted and has more representation from small and mid cap companies, that ETF is actually doing really well. So I think that's what you're seeing here. So now getting back to your question, something like this could kind of get more people interested in some of the larger caps like Biogen. But again, I think that there's probably going to be some cautiousness because, look, Alzheimer's, it's a horrible disease. We all know that. There are no good drugs to treat Alzheimer's. But at the same time, every drug that has been targeted at the disease has failed, right? We're talking there's like 100% failure rate in Alzheimer's. So, that's kind of the sort of the backdrop of what we're talking about here. And that's why everyone needs to sort of take a step back and be like, all right, is this real or not?
You said you had some questions still. I mean, they gave the results. Maybe we'll get on the call. What are the two primary questions that you have going forward to verify the validity of this test and of this drug?
Yeah, I mean, really, I mean, you want to see what the magnitude of the effect is, right? I mean, we don't know We don't know how many patients were treated at this dose. We don't know the magnitude of the effect. We don't know the durability of that effect. All those kinds of questions will matter, and we won't get those answers until somebody gets up on a podium at a conference and puts some slides up and presents the data.
And one other question here, I think one overhang on the biotechs and the sector has been the administration's stance here. And they really, they're going to lower drug prices automatically in 2 weeks. And there's been a lot of jawboning, but there hasn't been a lot of policy here. So do you think that hang, over drug pricing in this sector is kind of being lifted, or, still waiting for the kaboom to come down from the administration?
I think that, initially there was a lot of fear, and that was a risk hanging over the sector. I think as kind of things have played out and not a lot has happened, people have started to tune Washington out. So it's played less of a role. I would say, though, that could change because we got the midterm elections coming up in November. Clearly the election, the campaigning is going to sort of start kicking in at the end of the summer. And so you could see a lot more rhetoric, proposals, legislation, action coming out of DC in terms of drug pricing, kind of going into November.
Adam Feuerstein, Stat News, thanks so much for the time today.
Thank you, Adam.
All right, thanks, guys.
All right, always good insights to get from Adam. That man knows his drugs.
He knows biotech.
Yeah.
Thanks a lot, Spencer and Dennis. Got a great job coming up with that idea. S&P futures, I'm hanging out down 5 1/4. As I mentioned, we've already had a 16-point range here, down 5 1/4. Of course, that's all going to change when that jobs number comes out at 8:30, or it could change at 8:35. Quickly, Spencer, could you just bring up a daily chart of the crude oil here? Man, this thing was bugging me at 74 yesterday. And I wanted to put a straddle on because I said, we're going to move from 74. I might as well put a straddle on and then play it one way or another. And I just couldn't pay over $1 for the 15 USO straddle at that price, but now it's in the money. We're breaking down on some critical support here at 72.54. So keep an eye. I mean, if it can stay above 72.54, we got a chance in the rally here. But some serious downside in crude oil if you can't hold this recent low. The recent low is 72.18. As you can see on the daily charts, look out under that 72.18. You don't have a daily low coming in to 70.56.
It was a big run for crude. We mentioned, I believe it was yesterday on the show, I was concerned about the candle from the previous trading day because he had opened at the highs and closed and gave most of it back and actually closed in the red. So that was really what I didn't like about crude. I've still heavily invested in my long-term investment portfolio, still a believer in crude here, just because it had been beaten up so much, and it's not, I don't buy the USO. I don't like buying the USO in a long-term investment portfolio because of the contango effects. I just basically play the crude stocks and, Canadian ETFs, and because I'm Canadian, I've got some of them, but it's similar to the XLE. That's how I would rather play it, is actually with the oil stocks as opposed to with oil itself, just because I don't like the contango. But from a trading perspective here, I feel like crude topped out 2 days ago. So now it's coming back in. I think it was a gift yesterday when we got up over 15. I did play from the short side. Lucky that I did because we came back in. And I think on bounces here, I think I'm still selling crude.
Abner's Boy in the Google chat, if we have time, we always have time for you, Abner's Boy. Is there always a winner and a loser in an options trade? Dennis,
yes.
You want?
Yes, 100%, because you've basically just got a contract between each other. So somebody's obviously selling you a call and when you buy the call. So somebody's directly on the other side. So there's absolutely, it's a zero-sum game. Your win is another person's loss. So unlike equities, when you buy a stock, if stock prices are just going up overall, there's actually value being created overall. Options is a zero-sum game. Whoever is making on one side is losing on the other. So the answer to that question simply is yes.
Can I just put one caveat in there? Because we talk about this all the time when you see the big option trades, like a big call trade go off or a big put trade. You don't know if someone's hedging a position. So if you sell, if someone sells a call to you and, it ends up, the price still ends up going higher and you end up benefiting on the trade, yeah, they're a net loser on that call position. But if they're protecting a stock position,
they could still make money overall.
Exactly. So just, and that's the thing. You see these things about these huge option trades, and a lot of people, make a lot of big news out of it, but you just don't know if it's part of someone's hedge or someone is actually covering a position instead of initiating a position. So there's a lot of different caveats. Dennis gave you a good answer, and I just wanted to throw that on
good
top
point you're making there too. And we know we don't talk options that much on the show because I'm more of an equities guy, but I tell you, I've done a lot of options trades in the past here too. And if that's stuff you want to talk about more, we can surely do that. We bring Nick Shaheen on Tuesdays, who's I think an excellent options trader. And he primarily focuses on selling options, which is what I've always done as well. I've never been a big fan of buying calls and puts. I've always been a more of a fan of selling them because you're bringing in that premium, then you have time on your side. You're always bringing in time value as well. As it comes down, as time goes on, you're bringing in more money. So time is working for you as opposed to against you when you are selling options. But the one thing to consider is that it's very risky selling options because you're selling, in the case of calls, you're selling little lottery tickets out there. And every once in a while somebody wins a lottery, and a good example would be in Biogen. I mean, if anybody was selling calls at 305 or 310 yesterday, they got absolutely burned. I saw, and you can probably bring this up to Joel in the background, but I think like the 305s or I don't know if it's 305s or 310s were closing like a dime. So you're talking about, here's somebody selling an option for 10 cents that's going to end up losing, 33 or 35 points on it. I mean, that's the risk. So I've never been a big fan of selling options for like 5 cents or 10 cents. I go farther out to try to grasp it a little bit more money as opposed to just selling the flat out lottery ticket. If I was actually a buyer of options, and I have been in the past, I usually like buying, the penny options, and I feel like something can happen. It's setting up for a big move. Sometimes you can get in there and buy an option on the cheap for a nickel or a dime and have, a wild long shot at, making some pretty quick money. But, overall, I think buying options is a net losing game in the long run, in my opinion.
And also, I mean, you can sell options, but don't sell options in biotechs naked. I mean, if there's
That's the one thing too. Great point. I mean, it is so true, Joel. When you just come in here on options and, you're looking at the biotechs may give you a little more premium, but man, you get run over on the random drug news. I mean, there's not, how often does a stock rally 13%, just randomly? Not very often. I mean, even if Biogen was upgraded, it would be up, 2-3%? Drug news affects these things more than anything, more than earnings. So, and it's random a lot of times. I mean, sometimes it's scheduled, but a lot of times it's completely random. And that, 7:30 news last night, which was in the Pro, somebody was saying it wasn't in the Pro. I just want to make that point. If you are using your Pro, make sure, you go to your sources and you check for press releases as well, because it was in there at 7:30. It's if you have your sources and you don't have press releases checked, you might not have seen it, but all the press releases go right through the Pro. Just go into your sources and check press releases, and you would have seen it at 7:30.
I would add that SEC is also an equally as useful source to check.
It is, for sure. You get a lot of, any problem with the SEC when you check that there's a lot of data coming.
There is a lot.
So you're going to see a pretty busy stream when you check SEC. So it's up to you. It depends on how much you can read, how fast you can read. Well, there's some good data that comes from SEC too. It all just depends on how fast you want the stream going.
What I do is I have a separate workspace for just my SEC and my PR newswire, and so that's like my second place to check is the press releases and the SEC filings.
Right. The press releases are really good, and obviously, the Pro themselves, the guys there are running the desk, and they're trying to give you their commentary and do stuff as well. But at 7:30 at night, press releases happen, and there's movement from press releases. So I always have it checked in the Pro. I think you should too. If you're an active trader. There was one other question just before you go on, Joel.
Sure.
IQ. I wanted to go to IQ because this thing is getting hit hard here this morning.
I'm going on mute while you talk about this.
He doesn't like to talk about this. Kramer, this is so if you're looking at IQ here this morning, Jim Kramer came on last night and talked about all these newer IPOs. And he basically said that he thought IQ and BILI, that there's no way for him to assess these things, and he wanted no part of them. And when he said that, IQ literally tanked like 1%, like in like a minute. If you go check the, just around 6:30 last night. That was all kickstarted by Jim Cramer and has just continued here this morning. So he was one. He's your catalyst here from last night on Mad Money. Basically said IQ and BILI that these things were really hot, but he basically said he wanted no part of them. On the opposite end of the scale, he said he likes Dropbox and he also likes Pivotal, PVTL. So if you see both of those stocks are actually not trading down here today, besides the overall market trading down, that's because Jim Cramer was talking about all these newer IPOs. He did not like IQ and BILI because he didn't have enough information on them, just because they're Chinese and they're hard to get information on, fundamental information. But he likes Pivotal and he said to buy, and he also likes Dropbox and he said to buy that one too last night on the show. So both stocks actually got a little bit of a lift. They're kind of, so if you're looking at, something that could be strong, people follow through on the Cramer stuff, which they sometimes threw. It was Dropbox and Pivotal, but IQ and BILI are in the doghouse due to Jim Cramer's comments.
So why did he pick on those two? Those are the other two are also recent IPOs. So
yeah, because they're Chinese. So he said he can't get the information on them. So he was basically, it is hard. It is hard on the newer IPOs from China to get information on them. They're not, they don't have, the accounting standards. They don't have as much information out there as, some of ours do. So, there's a little less regulation over there too, obviously. So, I mean, it's just harder to get information. I try to, sit there and analyze, some numbers for them too. And there's not much out there. So I get Jim Cramer's point. And you know what? I just say these stocks, I've been kind of dogging them for the last week because I think they're broken. I made my money in IQ and went from 20 and, I sold soon. I sold some 25. I sold some at like 35 and I sold the rest of it in the low 40s. But now it's come back down to earth, and BILI has not just come back down to earth, it's basically given it all back. And we're 12.50 here now. At a certain point in time, this thing gets down to $10 again, maybe it gets interesting. SOGO looks like it's going to test $10 here. That's where it broke out from originally. Could be interesting as well. And, just overall market, we can get the jobs number here in 2 minutes. So a lot of things may change, but I mean, this market has bumped its head up against this resistance a couple times here now. Get a decent jobs number and they like the data, we could pop through this resistance and be off to the races. There's a few stocks that are setting up for breakouts here. So we are still range bound until proven, otherwise. But I would just say, as we continue to bump up against resistance, we may poke our head and, maybe we do take off. So I'm completely market neutral here right now. But leaning on, looking and ready to strike. And, again, in some of the biotech stocks too, if they get kickstarted by the Biogen data today.
Okay. Are we done? Is that the last time we ever mention IQ on this show?
Like IQ. What's wrong with IQ?
You know what's wrong with IQ.
Oh yeah, you bought puts and you sold them too soon.
Yes.
Okay. Joel called the top, but he's again sold his puts. You got that scalper blood, Joel. You got that scalper blood.
I had July's too. July.
Oh,
yeah.
Joel.
Oh, man. Okay. All right. Let's move on here. Dennis, you only got a minute here to get get ready for the number here.
Yeah, I'm going to take off. Let you guys go with some of this other news here for like 2-3 minutes. So
okay.
I'm going to trade the number.
Okay. All right. Spencer, why don't you give us a preview here, and then I'll get us set up for some levels to move. And folks, gold and silver can move on this too. Spencer, what are we
only two numbers we're looking for here. Non-farm payrolls, 200,000 jobs added. That's the number we're looking for. The prior reading was 223,000 from last month. So 200K on the non-farm payroll is the magic number. The unemployment rate is expected to remain unchanged at 3.8%. So 200,000 and 3.8%. Those are our magic numbers for the number coming out now.
Also the average, the hours,
hourly wage growth.
That's the big number.
Yeah, 0.3. 0.3 is where that's expected to be at. I guess
that's going to spook the market. Anything above 0.3 is really going to spook this market. You had a big sell-off in February. Anything under 0.3, you can get your rally cap on here. Spencer, maybe go to the 1 minute chart here in the S&P 500 index futures. Here we go. We're getting a little bit of a bump here.
213 and versus for the non-farm payrolls versus the 200 number. So even more jobs were added again. Second month in a row. Unemployment up 4% versus the 3.8% number. But wow, so higher than expected on both the unemployment and the non-farm payrolls number for June. Still waiting on the average hourly wage growth.
Yep, folks, yeah, keep an eye on that. You just got to bump up. We went up to Thursday's high at 39.50, now unchanged on the session. Nice little rally there. I do not see much move here in gold or the financials. Everything is still kind of quiet here. I would say they're still waiting on the average, the hour rate here. Jobs up 213,000. Definitely good for the economy. And we are still waiting here. Spoozy, let me get the high tick for you there.
Wait, average hourly wage earnings rose 2.7% in June. 2.7%. There, so that's the number.
It
there.
was 3%. 3% is what we were worried about, not 0.3%. Right. Okay. All right, there you got it, folks. The Spooce had a little rally, 39.50. That was your high from Thursday. So far, what was the high on that first bump? That first little bump that we got there went to 40 even, and now we're hanging out at 38 and a quarter. So good call by Dennis. We did get a little bit of a lift. Trying to stay green on the session, I would like to see the S&P 500 futures get green and stay green here. But so far, a pretty mellow range here. You did get the pop. That was even a few seconds before the dumper. But right now, Thursday's high still standing in the way here from a major rally. 47.50 is your pre-market high. That's right up there with your 6-day high. At 27.48, we're going green now in the S&P 500 futures, not by much here. So we got to check on some imbalances. Now we're over 27.40. Nice call by Dennis here. Now green on the session. Trying to pop out of the top of that trading range. I am glad that I am flat as far as puts and calls on this. We'll see if it's an opportunity for the S&P 500 futures to break out. I can imagine Dennis is pretty busy there, Spencer. There's some good action here. So why don't you lead me with our next news item?
That was a very interesting number because you know how we were already at full employment and we were expected to add even more jobs. We added more than we thought. We're for the second month in a row now. So a lot of jobs are being added. I guess we're even I mean, would you say we're at full employment now with unemployment taking up 0.2%?
I mean, we're beyond the expectation. I mean, we are beyond full employment. The thing that spooked the market in February was the averagely hours earnings rate, and that was tame. So what that means is the market's not as worried about inflation. There may not be as many bumps up in interest rates. That's why your banks are flat. Your Goldman Sachs is down 72 cents. The market's up almost 0.2%. You have Bank of America trading in the red here by 3 cents. Morgan Stanley is unchanged. Citigroup is down 31 cents. So if you want to find something to buy here, it's not the financials. Let's see how BIIB is reacting to this news. I mean, 340 still bid here. It's got some good news. Dennis mentioned he'd be keeping an eye on the IBB2. That's trading up $1.32 at 113.30. The recent high of the move in that was 113.90. I'm looking at the top 10 components in the S&P, and man, oh man, I just am seeing some mixed red, a little bit of green, but nothing really to validate the market being up. When Dennis comes, he'll have to show us where the strength was in the individual sectors. So
I just I just was curious about Deutsche Bank. If they would, I don't know if they typically react to this because they are, a European bank, but they had their own headline this morning, which is why they were up ahead of the number. But I don't think they would typically react to this, right?
Just news me on Deutsche Bank.
The news in Deutsche Bank is that according to a German newspaper that I am not going to try and pronounce, they had received interest from J.P. Morgan and a bank in China as far as an investment is concerned. JP Morgan has already denied the report. So that's why DB was up this morning.
You know who was, when we were looking at the Abyss a couple days ago or a week and a half ago, you know who we had on the show that was pretty bullish? I'd say that he wasn't throwing Deutsche Bank under the bus. And I would say he was downright bullish there in that $10 area. Spencer, you remember who that was?
In Deutsche Bank?
Yeah.
No. Oh, if it was before the holiday, then no.
Before what holiday?
July 4th, the holiday we just had. You said this week?
No, it was Mark Yusko. We had
okay.
him on when we were looking for double digits in Deutsche Bank, and he wasn't that worried. Kudos off to him, because I remember last time it came down to $10 and we thought it was going to tank. He thought it was a decent opportunity here. So and high in the S&P futures right now, we're up 5 points here at 43.5. Gold is catching a little bit of a bid here, as well as silver. Spinner saying that J.C. Peretz also liked Deutsche Bank, and I'm sure remember that. Pre-market high is 47.50. 48 even was your 6-day high. So we are coming up to the top of the trading range. Let's see how the market reacts. Spencer, I guess tariffs don't make any difference now in the market. Right? Everything's okay. We did have some tariff news, but it was expected. Why don't you give us?
Well, we've been talking about the tariff stuff for weeks now. So today was always going to be the day where the first of the tariffs go into effect, and that is what happened at 12:01 this morning, or last night, or this morning, or however you want to phrase it. But $34 billion worth of tariffs went into effect, U.S. on China, and then China on the U.S. So that's where we're at right now. Trump did threaten $500 billion of more tariffs that add that to the list of tariffs that have been threatened and not enacted yet. But we do officially have some tariffs that are in effect. I don't think it'll mean much for the market, because we've been talking about this for like a month or two now. So, but that's where we're at.
Okay. All right. So if folks, if you have any issues here that you're going to be day trading, or you have a longer term positions on that you want us to take a look at here, go ahead. If not, Spencer, why don't you go ahead with our next news item?
Well, we did have one earnings report, I guess we should talk about. We're sort of in the calm before the earnings storm, with the banks reporting. Next Friday is when we're going to get the first of the three big banks reporting. JP Morgan is next Friday, Bank of America, I believe, or Citi and Wells Fargo are all next Friday. But we had one this morning, and that was yesterday after the Dow, PriceSmart PSMT. They reported the Q3 EPS of 61 cents that missed the estimate by 2 cents. Sales of $782 versus $777 million. So they beat that number. A mixed report, a miss on the EPS, a beat on the sales for PriceSmart PSMT.
Okay, just a few days ago, the stock was up, had a 94.45 high. It got hit. It got hit after hours. It's getting hit this morning. Your pre-market low stands at 85.50. You're only 50 cents away from there. So now we are looking. Next thing I will try and find a daily low that corresponds with that. And the daily low that I find corresponds exactly, or not exactly, just above that low. On June 8th, you had an 85.75 low. June 6th, you had an 85.15, 85 looks like a good number. I mean, if it takes out, it looks like we got some more room to do on the downside, just because we've only bounced a half a dollar. But 85, just remember there's a double bottom there is potential support. Stocks had a nice run since May when it was in the mid $80 handle, but certainly not getting away from that pre-market low of 85.50.
Man, Dennis must be really in the thick of it.
Yeah, it's busy, man. We probably 10 handles, so I'm trying to get back to the show here. But
that's all right.
Trading is still my priority when there's action like that.
Have a good weekend.
Sometimes I've got to slip away to trade the numbers, and there was some big pop. I mean, I somewhat expected, that the S&Ps wanted to rally, so I'm not surprised here. I think we can break out here today. Just as much as I was bearish, a couple of days ago here, it's starting to look pretty good. And now that being said, you got a lot of resistance here. 73.86 the high from a couple of days ago, 73.66. So there is some resistance in here. I just felt before, there's going to be, with Biogen up 40 points, there's going to be some sectors that are going to get some love here this morning. I feel like that it could push us out of this resistance area. And then you start to look, there could be some other stocks or some nice setups. And I was writing a few of them down. I mean, Microsoft looks like, it's trying to get a little bit itchy here. If it could get back up over $100, it's bumping its head up against resistance. You can look at MasterCard. I have this in my long-term investment portfolio. It's another one that's, starting to look a little bit like it wants to run again. Netflix looked like it's going to run here again. Tesla, which is down here today, and I took a flyer for a swing trade here yesterday. I'm in Tesla long, only a swing trade, not a long-term investment. Reason being is that I think we shook everybody out through 300, so I'm leaning on yesterday's low. Okay, takes out yesterday's low, I will get out 296.22. That would be my stop out there. But leaning on that and saying that I think we shook people out through 300. Maybe it gets a little relief rally here because it's been down straight 60 points. So that's the only reason I took a little flyer on Tesla. But some of these stocks are starting to look a little bit better here, at least. That being said, though, hard to come in here and be a buyer until we're through 274. So that's really the bogey. We need to get up to 274. I think biotech could take us there today, though.
All right. Well, get back to the trading, Dennis, and then
I'm good now. It's calmed down, so I'm a little bit better, anyways.
Okay.
It was a big move. I mean, banks are slightly down here, like you were saying, Joe. You covered it well. I was listening to you in the background. I mean, you look over here, markets popping. The TLT, which is a good indicator here too, popped a little bit there, but we're kind of just hanging out here now. They're still trying to decide. We were down fairly significantly, down 6 handles going to the number. Now we're up a couple, so we've had a tidy little 8-point rally. Now the market's trying to figure out whether it wants to give it back or whether it wants to sit here and digest it and possibly move higher. So still to be determined. If you want to get a little look, imbalances here. GE, which has a sell and balance every day, 188,000 to sell here this morning. No difference. There's just a fund that wants to sell continuously on it. Can't say I blame them. Twitter, 47,000 to sell. BIIB, 26,000 to sell. So a lot of these early sell and balances that I see were probably in there before the number hit. So now you're probably going to slowly see over the course of the next 50 minutes more institutions coming with buy orders, which could offset it. But I mean, a lot can happen. We're still chopping around here pretty good. We could end up going back red here as well. So just keep an eye. If we can start to slowly claw our way up and get through 274, could be in breakout mode. So just, been in this range. This is 2769s to 273s we've been talking about. We're at the upper end of the range yet, so guilty until proven innocent. The range would say, sell this pop. I'm just being cautious is because we have, that Biogen data that I feel like could push us up through it.
All right. Dennis, I want to cover 4 stocks that you just mentioned, or 3 stocks you just mentioned there, and then one other one. The one in the chat that I want to address is for someone asked about VC, Visteon. I do not see any news besides it's being added to an index.
That's the news.
That's the news. Trading up on like very, very little volume here.
These things go though, Joel, when they get out of the 400. I'm not surprised. So? Yeah, I think it's going to probably be trading up near those highs. This isn't going to be one that gives it back. I don't think. You know what? The S&P 500 ads haven't responded very well as of late, besides the Walgreens one. I'll tell you, there was one that was added to the 400 like a week and a half ago. I forget who it was. And it opened up and it ran another 10 points. So I'm not fading this Visteon move, not at all, because these things getting out of the 400 seem like they've been getting a lot of love here lately, and that trend is that they buy these things. So I don't know if I'm buying it up $7, but if it was to pull back to the 131, 132 area, I think you got buyers all over the place here. So don't know if you're going to get a shot, but it would not surprise me if this thing ticked 142 here today. So like 140 as well.
Was that one? So was the one you're thinking of?
I'm not a seller at 136.
Was the one from a few weeks ago? Was that EXEL? Was that what you're thinking of?
I can't remember. Spencer, EXEL? No. There was, keep looking. There was one other one. It might not have been the 400. There's so many different S&P index. Could have been the 6.
Yeah, I'm not going to check every index.
Well, I'm trying to remember. It was like a week and a half ago, and I was like, man, it was up like 7-8% on that. And I felt it was ridiculous. And it ran another 7%. So it was up like 14% at the end of the day on an S&P ad, which seems absurd. Fundamentally speaking, it makes no sense whatsoever. But this market is hot for those getting out of the smaller indexes right now. So you got to understand those trends. And the trend right now is they're buying those things. So Visteon up 8 on this. I'm not surprised.
All right, pre-market high. You're trading right at the highs of the pre-market session at 136.27. Very little volume is traded here. I will alert our traders that we had a high at 137.20. That was on June 20th, so keep an eye on that. The all-time high, which Dennis is looking for today, is 140.64. Dennis, you make a pretty convincing argument, but with it up nearly $8, I know there's no way we're going to come to a suitable wager on the closing price. So I will just move on to
I say it's above 135. I mean, we just tick 136.27 or 134.45 to 136.50. So if you go in the middle of that, I got to give you 135.50. I think I can close above 135.50. That's a suitable wager right there.
It is a suitable wager, but I will pass.
I'm scared because I'm hot right now. I get cold too, guys. I tell you, it's this streaky. Trading is streaky. When you're hot, you got to strike a little bit more. Even for me to luckily get some Biogen last night.
I know.
I mean, I've just been getting lucky lately. So, it's about good calls too. I mean, but typically, I'm probably batting. You try to bat 55, 60%, you can do pretty good in this business. I'd probably gather I'm batting a lot higher than that in the last month. I'm just on a hot streak, but I'm not going to continue on the hot streak. I'm going to go on a cold streak here too. So, it's just the way it works. Lucky to pick up some Biogen last night. I was lucky to get hit on some Biogen last night after obviously that data was out. Not as good of a trade to sell it as half of it as soon as I did, but I mean, it's just the way trading goes. And when you're hot, you got to strike a little bit more. And when you're not, you got to back off. When I'm not hot, and this will happen, I will go on a cold streak here again. You got to reduce your size. You got to back off and, be a little more nimble there. So I never stop trading. And a lot of people ask, if you're having a bad day, do you stop trading? No, because I'm trading stat arb and I'm doing statistical edges that should work out in the long run. But what I do when I am having a cold streak is I lower my size. So if you typically trade 1,000 shares, maybe you're only trading 500 shares of something. If you typically trade 3,000 shares of something, maybe you're only trading 1,500 shares of it. So I usually cut my size back when I'm cold. And when I'm hot, I try to increase my size because I'm doing well. So just the way it works.
All right. Another stock that you talked about, man, check out Twitter. Whew. Can it clear $45 for good? Your last five, you had your 2-day high at 45.48. But I'm just looking at 44.84, 45.20, 45 even, and 45.11. Lows all in the same area too here, folks. So Twitter holds 45 here. I'm looking at, for a little bit of a breakout, perhaps a continuation of the run. High of the move was 47.79. Seriously considering selling part of my long-term position yet, but haven't pulled the trigger as of yet.
There are certain stocks that Joel is just hot in always, and Twitter is one of them. So listen close when Joel's giving you levels. If Joel sells, I'm selling short.
Okay. All right.
Joel's been on Twitter, Bitcoin. What are the other ones? That Western Digital, you did pretty good on that one too. But
I still got it.
And especially Bitcoin. You make great calls on Bitcoin. You were even getting bullish Bitcoin there when it was at 6,000, and it's popped up since then. You should just become a crypto trader, Joel. You may be Mr. Calling. You're good with the crypto.
Oh, thank you, Dennis. I just want to talk about Dennis's trade yesterday here in Tesla. And when we were talking about it on the phone, and it's the hardest thing to do in the world, but you talked about you wanting to get long it. And this was like when it was like 307 and then 308. And you said, I know it's going to press 300. I know it's going to shake people out at 300. And then I identified a low that you had at Tesla at 297.48. And you're like, you know what I should do? I should short it. And then when it goes down there where I want to buy it, I should reverse. But that's like the hardest trade to do. Yeah. And I think I put that 297.48 low. I think I put that in the chat. You did with those kind of stocks, those kind of orders, you just got to stick your order out there. Because it went to 296.22. And if you didn't get that on the way down, well, good luck on trying to buy that on the way up. Because
it came back above it. As soon as it got back above 300, that was the buy signal because it shook everybody out. It hits the stops. And you made a great point there, too. And we were talking, too. When the thing's at 307 and it's on its way down, you just got that feeling it's testing 300. So we both should have shorted at 307 and just covered like 300, 299, because you probably knew it was going to test and go down there and hit those stops. It was classic shakeout through 300. And then it had the wicked rally back up through it. Now the question is, can it get back up? Can it hold 300? And that's why I'm playing it, potentially for the bounce, because I think 300 can hold. I think, 296 is going to be my stop out. If it starts making a new low on the move, then the trade is wrong, and I'm on the wrong side of it. So I was going to give myself 10 points and, see what happens and, go from there. But that's going to be my stop out. So I'm sticking with it until either 296 happens or, if I'm going with the risk reward, probably 330. So total setup on a swing trade here.
Okay, and then the other one, I'm kind of kicking myself here. I don't know if I'm going to get a chance. We talked about Pfizer yesterday, going through that 36.50 level, and it cleared out that size right off the open. You didn't even have to worry about a gap. 36.54 open, 36.51 low, and you ticked right up to 36.91.
I bet you there's size at 37. I bet there is. I don't have my book open yet. I didn't open it. But if you go, and I can go check that for you in a second. Just don't open my book. It'll take me a minute, though. So
take
I'm
your
so
time.
busy with all the biotechs, I didn't open my open book here yet.
Someone in the YouTube chat, Joel, asked about JP Morgan. Can you just give us some levels on that? And they were asking whether now would be a good time to get in.
Okay. I mean, I could look at it. I mean, just the chart says no. I
say no, too.
Yeah. I mean,
I still don't like the financials.
Yeah. And especially, with them not reacting today. I mean, if you absolutely positively, had to try a swing trade in it, 103.11 was the low of the move here. And you've had a couple lows in that area, 103.11, 103.23. It sure looks like it's going to press on that today.
I think it's going $100. I think it's going into double digits. It's come this far, and we've come down. Not that's went in a long ways, but from 119, come this far. It hasn't come this far not to test the double digits. Maybe shake some people out under $100, but it's not doing it today. I mean, JP Morgan moves slow, but I think over the course of the next month, I think we see a 99 handle in JP Morgan. I think you get it cheaper. My opinion. Maybe I'm wrong, but I've been right on the banks for a while. I'm sticking bearish on them.
Yeah, I mean, the chart is telling me maybe, put a buy stop over like 106 or something if it starts to move in your direction. But, I mean, how many monthly candles in a row do you have in the red? Since January, financials have been out of favor. So Dennis and I are in agreement on that one.
I've lost a lot of money trying to call bottoms, and I try not to do it anymore. And we know when stocks are going down, they just tend to continue to go down. I don't know. Like I was saying before, I was worried about Deutsche Bank. DB has rallied here now. Not as worried about Deutsche Bank. That's some good news here. Banks still are not getting life. I mean, that was great news last week. You can say, oh, maybe the buyback wasn't as much. The media will always find a fundamental reason to justify a move. It was an absolute tell when they could not hold those gains from the big buybacks and the big dividend raises that they
last
did.
Friday.
And they just got sold immediately again. It's telling you the big money still wants out. And what moves markets in the long run? It's not high frequency traders. It's not retail traders. It's not day traders. It is institutional money, because if there's institutions that are selling millions and millions of dollars worth of stock, the stock is going to go down. And that's what it was telling me there. We got a nice pop in Citi. We got a nice pop in Wells. We got a nice pop. Wells is still trying to hold it. But JP Morgan had a decent pop that day. All the other ones sold off. Goldman Sachs looks like it's hanging on a cliff. Morgan Stanley made a new low yesterday. These things, they're not getting any life here this morning either. They're starting to leak here again. I mean, they're just worried interest rates are maybe not going to go up as fast as we thought they were going to. You got a flat yield curve. You got still problems over in Europe. Why? Why own the banks now? That's my question. I know everybody says they're cheap. Well, you know what I've learned? Cheap stocks get cheaper.
And should we use the old Connors line about what happens when you try to pick bottoms?
Sticky fingers.
Yep, exactly. Bank earnings next week, Wells Fargo, Citigroup, JP Morgan on Friday. Some of the big guns the following week, Goldman Sachs, Morgan Stanley, Bank of America. Stargazer wants to bring a banking analyst on, so Spencer and I will put our thinking cap on over the weekend. And we only bring in Gene Munster to talk about Tesla and Adam Feuerstein to talk about the biotechs. Give us some suggestions, Chad. What banking analyst? Mike Mayo, I don't think we've ever had him on the show. Dennis,
and when we bring on Tim Melvin, but he's smaller, so he's obviously,
I'll dig into the analysts a little bit. I'm sure we can find someone. I don't think we've ever had a banking analyst on the show before. So
let's get one from like one of the big guns.
Yeah,
see if we can hunt one down for you. And maybe they could talk me into it. I mean, you do have a catalyst, like you said, earnings are coming up for these things.
Mm-hmm.
Maybe they can get a bit into those. So we know they like to have their earnings run ups. So, I don't think I would want to be short the banks ahead of the earnings. So when's the first bank earnings date?
Friday.
Week from today. Okay, so a couple more days, maybe weakness. You'll probably see them start coming back up Wednesday or Thursday. They typically, and I play that strategy. I am typically a buyer of stocks ahead of their earnings reports because there's alpha to extract from being long ahead of the reports. Not into the reports, but ahead of it, because people anticipate that they want to be long ahead of the reports. And it seems like clockwork that they like to buy them ahead of the reports. And they like to buy stocks ahead of fundamental data as well. They like to buy stocks ahead of news events. And, I don't like holding them through the news events, so I would probably sell those. But maybe Wednesday or Thursday, we'll get interested in buying a few of these banks ahead of their earnings, just for little swing trades.
And I know we're kind of talking like both sides here, but I always like to look at things from like the opposite perspective. And let's say you were short a boatload of JP Morgan here going into the number. I mean, do you want to try and lock in some profits here? Or, or you just want, it seems like everyone beats all the time. You don't know how they're going to react to it. So there could be some buying in there by shorts covering as well, too. So that could push the stock up. But just, fundamentally, based on the weekly, based on the daily, these charts are not looking that good here. All right, Dennis, were the analysts, were they sleeping? Are they still at Jones Beach, or
we got some? No, we got some this morning. We got some ratings. We got a downgrade this morning from Carnival Cruise Line, catching a downgrade from Argus from buy to hold. We have
what's interesting on Carnival Cruise too, here's a good example of trading. So this got downgraded from Argus. You would typically think it's probably going to go down. It's downgraded. That news broke. I shorted the stock. And you know what? Just buyers. I kept finding buyers. And I'm like, you know what? It does not want to go down. And I've covered the stock. And I'm glad I did, because I've covered it back at like 56.60s. It's now at 56.89 and not wanting to go down. When you're in a trade and it's news in your favor and it wants to start going the other way, I think, there's just, I don't know why. I have no idea why this wants to go up here today. Maybe there's something else was said. Maybe I missed another analyst report. I'm not sure why. But I tell you, maybe it's tariffs. I don't know. But Carnival Cruise Lines, for whatever reason, does not want to go down in this downgrade. And I don't fight the tape. The tape is telling me cover that short, and I did. So how do you know when you're on the wrong side of the trade? You start losing money. I always say that. So I don't like losing money. I don't like playing with my money. I like playing with the house's money. I start losing money, I'm already looking how to get out.
Interesting. You got a double top at 57.17 and another high 57.44. So just a bump above that. I mean, there's your resistance, 57.15. Just taking a look at one stock here for Malik. And I really couldn't tell you whether, to buy or sell this one, Kara. You had the big move up. It was probably on some good drug news, but you faded. And now you're just kind of like just trying to climb your way back up, but you're finding sellers here. If I was long, I would not like to see it at 17.50. After you had the gap up on that news, 17.59 and 17.70 were your two lows. So that would be a potential stop out on the downside. Man, on the upside, that's a tough call here. But if it got back over 21, what's the high close of the move been? 2010? If it gets back over 20, holds a couple closes over there, it might have a chance to test the high of the move. But just looks like there's a little bit of a seller here stepping down after the big update. Dennis, any comments on this biotech?
No, I'm just going to go back to Pfizer because we only have 30 seconds left, and I promised I would look at the book. 240,000 shares to sell at 37 in Pfizer. So that is a roadblock there for that stock. Full disclosure, I still have this long in my investment portfolio. I'm sticking with Pfizer. I like from a valuation perspective, and I like my 3.69% dividend. But 37 is the next hurdle for it. It's getting a running start at it today, though. And if drugs and biotech get hot, it could take out 37. It goes through 37. The next roadblock, I always like to look at the book, is 37.50. where there's another 400,000 shares. And if you get through that, you're going. It's not getting through that today. So we won't go any further. But 240,000 at 37, another 400,000 at 37.5. These orders matter, folks. Those are huge orders.
Okay, I'm going to fade you here on the breakout today and the rally on.
You don't think Pfizer can get through?
I don't know about Pfizer. I'm just talking about the overall market here. 47.50 was your pre-market high. You had to rally after the number. You got up there. You're already starting to leak. We talk about institutions. I think institutions are selling at these levels. I don't think they're still selling. I'm not a buyer up here. Okay.
And you know what? And I just want to say, full disclosure, I'm still market neutral. A breakout is not a breakout until it breaks out. So Joel is absolutely right. We have failed in the 273s multiple times. I feel like I'm not shorting it because I'm scared that biotech takes us through it. But I'm not going long either because it's still not enough information here yet. Can biotech show some? Can the other bio? First of all, there's multiple questions to be answered. First, can the Biogen data filter over and spill over into other biotech stocks and start rallying those as well? Secondly, can a rally in that, if that happens, take the market up overall? Because it needs something. Because I'll tell you, there's a lot of stock sectors that are weak here today. I mean, oil is getting crushed here again. Just quietly, we haven't even talked about it, but the USO is down another 1%. That is not helping matters. Banks are not rallying here this morning on this data, so that is not helping either. Tech, if we look at it, it's kind of trading flat, and obviously, maybe, biotech helps a bit there, but not much. It's not much of it. So there's a lot of sectors here that are still looking kind of weak here, and you have the tariff war looming. So there's still some reasons to sell in the 273s.
We are going to have our guest, who I'm going to bring on right after a quick break here. Our guest, Dan Russo, he's with Chaikin Analytics. He's going to be able to break down the sectors for us. That's pretty much what he does. Is he gives an overview of the sector every day. So I'm going to take a quick break. We're going to say goodbye to Dennis unless you want to hang out for a little bit, and I'm going to bring on Dan Russo, the Chief Market Strategist at Chaikin Analytics. We'll be right back in a moment with Dan Russo. All right, welcome back, everyone. Pre-Market Prep. Spencer Israel here now with Dan Russo, the Chief Market Strategist at Chaikin Analytics. Dan, how's it going this morning?
Going well, Spencer. Thanks for having me. It's Friday, holiday shortened week. So
Yeah, always a curveball when there's a holiday in the middle of the week. But before we get to some charts, I want to just ask you about your background because I know you spent like 5 or 6 or 7 years at Needham. What before you came to Chaikin? What exactly was your role over at Needham?
So when I was at Needham, I was on the institutional sales desk. So basically what that means is I covered, my clients were hedge funds, mutual funds, pension funds, predominantly New York, Connecticut, and in Ohio. We have a group of research analysts who are, doing fundamental research on stocks. And, my role was to kind of keep thoughts and ideas in front of those guys. And from there, I, started at Chaikin Analytics about 4 months ago. So I'm a chartered market technician, one of the co-chairs of the New York chapter of the CMT Association. So I come at the world from a more technical bent, but I have an MBA and spent 10 years on institutional sales desk, so I understand fundamentals as well. Okay,
you sent over some charts, and before we get to those, I want to just ask you about the financials because we were just talking about it before we had you on there. Someone had asked us in the chat whether it was a good time to get into JP Morgan, and Joel and Dennis basically were saying this is not a good time for any of the financials, really. We've got the banks reporting next week, so that may be a catalyst. But what is your thoughts overall on the financial sector right now?
I think it's hard to talk about the financial sector because it's really diverse, right? You have the banks, and even within the banks, you have the large banks, like we're talking about JP Morgan, and Citi, and then you have the regional banks, and then you have the capital market stocks, you have insurance companies. The sector, if I was going to take a top-down view on the sector, I'm not a fan of the sector. If you look at a chart of the XLF relative to the SPY, it has rolled over and taken out support. Something proprietary to us at Chaikin Analytics, we have a 20-factor model for ranking stocks. And then what we can do is we can go into each sector and say, all right, how many stocks within each sector have a buy or a bullish or very bullish rating, how many are neutral, and how many have a bearish or very bearish rating. And that ratio is predictive out about 3 to 6 months. And I'll just give you a heads up now. I'm looking at my screen. Financials via the XLF, so big picture, big cap financials. Our model currently, 1 bullish or very bullish stock, 59 neutral stocks, 7 bearish or very bearish stocks. It's actually the third from the bottom of the major sectors that we track. The only things that are worse are the 2 that are most impacted by tariffs and trade wars, industrials and materials. So big picture financials, I'm not a fan. If I needed exposure to financials, I would probably skew to the regional banks over the big money center banks.
All right, let's stick with the sector theme here, and let's go over to a chart you sent over to me earlier, a chart breaking down or comparing the consumer discretionary and the consumer staples sectors. Why don't you kind of break down this relationship for us?
Yeah. So, and the chart that I sent over to you is equal weight to kind of neutralize Amazon's massive weight in the consumer discretionary group. And to me, that's just kind of that relationship speaks to risk on, risk off sentiment in the marketplace, right? When consumer discretionary, i.e. the stuff you don't really need to buy, but the stuff you want to buy, is outperforming consumer staples, the stuff you need to buy. To me, that's an indication of a risk-taking appetite in the marketplace, and that relationship has done well. Discretionary has been outperforming staples for a while, kind of backing up here a little bit with a little bit of a risk-off mentality as trade tensions resurfaced about a week and a half, 2 weeks ago. But overall, I like the trend in that ratio, and to the extent that trend keeps moving up and to the right, I think that there are bullish implications for the market in general.
What about this other chart I have here of the XOF versus the S&P 500? I'll bring that up here. What exactly is that chart showing? Or explain
which one?
The XOX against the S&P 500.
So the SOX against the S&P 500 is semiconductors against the S&P 500. And I'll preface this by saying I write a daily note for Chaikin Analytics subscribers, and every day is a different theme. And on Fridays, what I look at key relationships and themes that might not be on most investors' radar screens that I know from my time covering institutions, hedge funds look at, mutual funds look at. So I am a believer in the proliferation of semiconductors. If you just look at every aspect of your life, just about everything you touch and come into contact with, aside from your food, and that could change eventually, has semiconductors in it, right? I'm not even talking about your phone anymore and your laptop, right? Those are obvious. Your refrigerator is full of semiconductors. Your car is full of semiconductors if you drive. I mean, there are chips in sneakers now that send data to your smartphone that tell you how fast you're walking and how far you're going. Semiconductors, I think, even more than copper, are a barometer of the economy. And if you look at the relationship between the stocks and the S&P 500, again, it's a ratio chart that I sent over. It shows you how the stocks, the semiconductor index, is performing relative to the S&P 500. And that ratio is over 90% correlated to the performance of the S&P 500. So when semis are outperforming the market tends to do well. And what you've seen is this choppy pattern. I mean, I'm not a huge pattern guy, but it does look like a head and shoulders if you break the neckline. So to me, it's another kind of relationship that I keep an eye on that gives me an indication of how the market is likely to perform. If that ratio can break to new highs, it has bullish implications for the market. And if it takes out the neckline, it starts to kind of back me off of my base case view that the market in general is consolidating within a secular uptrend and likely to resolve to the upside. I honestly think that the ratio of semis to the overall market is probably one of the most important charts you should have on your screen.
All right, this next one I'm bringing up here is an industry that you're highlighting here, the S&P, the software and services ETF, the XSW. This is, I guess, a chart of your platform. Can you kind of break down what this is showing for us?
So the XSW is a software ETF that we track I try to highlight an industry, and I have to pick a stock every day for our subscribers. So I try to thematically look at what sectors are outperforming, and then within those sectors, what industry groups are outperforming, and then from there, what stock within that industry group is likely to outperform, right? Our model is a top-down approach. How's the market doing? Which sectors are leading? Which industries are leading within the sector? So if I look at software, you have a steady uptrend, stocks moving up and to the right. We like to read our charts from the bottom up. So the next kind of, at the bottom, you can see how software is doing relative to the market. And that is a proprietary indicator built by Mark Chaikin. And you can see that it's strongly outperforming the market. But interestingly, with the pullback from about 85 to 80, our overbought, oversold indicator became oversold. So we have a group that's outperforming the market that's now oversold. And above that is the Chaikin money flow indicator. That to me is a compelling setup. That tells me, if I'm an ETF trader, XSW is one I want to be long as it kind of regains our long-term trend line with solid money flow from an oversold position. If you're looking for individual stocks in the space, I highlight ticker FIS, Fidelity National today, but some other names that look compelling to me within that ETF. If you want some exposure, right? Tech is outperforming. Within tech, software is outperforming. So let's go find the strongest names. We have our proprietary rating system. I come to a name like Computer Associates, CA, looks compelling to me as long as it's above $35. Another that has a bullish rating within Chaikin Analytics. Verint, ticker VRNT, has a very bullish rating within Chaikin Analytics. Stocks currently oversold, sitting just above support in the $43, $44 level. That's a name I want to own. So that's kind of my approach to the market. I look for the sectors that are leading, within the sectors, the industries that are leading, and then from there, let's go get the best stocks based on our 20-factor model and buy them when they're oversold.
Are these for day trades or swing trades or investments?
Swing trades. I would kind of call it, swing trade for anywhere from a swing trade to out 3 to 6 months. It's not a day trading platform. It's kind of not the way that I look at the world. I was a market maker in a previous life. I was a specialist on the floor of the New York Stock Exchange. So I have traded that way, but it's just not, to me, it's just not how I look at the world. I think that there are a lot of really, really smart people who are using a lot of artificial intelligence and computer technology to day trade and pick up intraday scalps of 10 and 15 cents. And I just don't feel like I have any edge there.
All right, last one, and then we'll let you go. It is the Friday of a holiday week, probably going to be a light day. The news flow this morning was pretty lighter than normal, I would say. So how are you approaching a day like today as if you're in the market? If you're in the market today, what's your approach?
I think on a day like today, you really have to pay attention just because it is the Friday of a holiday shortened week. Trading desks are empty. Liquidity does become a concern. I think that, you need to have your levels where you're either getting in or out of a position and realize that you might think those levels are far away, but we could get hit one way or the other just because of the lack of liquidity. So, just because it's a Friday in the summer of a holiday shortened week doesn't mean you should take your eye on the ball. If you're inclined to take your eye on the ball, I would just kind of take my positions off and go enjoy the weekend and revisit on Monday when liquidity is a little bit better.
All right, Dan, I'll let you get prepped for the open. Dan Russo, the Chief Market Strategist at Chaikin Analytics. Dan, thanks so much for the time today, and have a good weekend.
Spencer, thanks so much. Have a great weekend. I appreciate you having me.
All right. That's going to be it for our show today, folks. Pulling up a chart of the S&P futures of where we're at right about now. If you want to catch our podcast or if you missed any part of today's show, you can watch it on YouTube or go to iTunes, SoundCloud, Stitcher, TuneIn, or the Google Play Store to catch the podcast there. Thanks to our guest today. Thanks to Dan and thanks to Adam Feuerstein. Thanks to all of you who joined us in our chats on YouTube and at premarket.benzinga.com. Hope you all have a good weekend. And I hope you join us again on Monday. We got a full slate of guests for you next week, so we'll be back with you on Monday. Have a good weekend, and good luck out there.